What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Do me a big favor. Do yourself a big favor. Get yourself down in that description box. You got 3 links down there. The first one is that Moo link, where the good folks at Moo are willing to give you up to $1,000 in NVIDIA stock if you decide to open up a new Moo brokerage account and make a certain deposit. You can get up to $1,000 in NVIDIA stock, guys. Second link down there is going to be the Wealth Builders Financial Community on Patreon. Now, y'all know that's my community that I've been rocking with, almost a year and a half now. And it's been amazing. We got a couple thousand wealth builders in there, man, and all we do is help each other build wealth and get the passive income. None of us are experts. None of us are going to try to tell you what to do. But when you got a couple thousand people sharing ideas and best practices and what's working and what's not working, listen, man, that's a powerful thing, guys. Now, you can stay out here in the matrix on your own and try to figure it out. We're gonna talk about that here in a second. It's pretty scary. And if you're out there in the matrix with nobody to bounce ideas off of, you might turn into a panicking. You might turn into a panicking. So consider checking out the Wealth Builders. Second link down in the description box. Just click on it. Just tap it gently. It'll take you over to Patreon. Sign up, man, and come join us. And then send me a DM to let me know you're rocking with me. And let's go to work. And then the third link down there is the website. Got 10 big boy blue chip digital products, man, that in my opinion could help you not turn into a panicking. So check them out, man. Everything from, credit repair all the way to how to invest in real estate with little to no money down. So check out the website. Well, guys, like the title says, stock market crisis. Millions of Americans are starting to panic. They're turning into panickins. And I'm starting to hear a lot of chatter that people think they could lose everything. So we're going to talk about the stock market today. But before we do that, let me give you a quick disclaimer. I'm not a financial advisor. This is not financial advice. This is my personal opinion. I go out and do my own little research, my own little homework, and I come back on my YouTube channel and I share my personal opinion. So please, before you make any investment decisions, go out and do your own homework, your own research, and come up with your own conclusion. And if you're not comfortable making financial decisions, go out and hire yourself a licensed financial advisor to help you. I'm not here to be a financial advisor because I'm not. I'm just sharing my opinion. That's all it is. I read articles, I use my experience of 30 years of doing this, and I share my opinion with my audience. That's all this is. So let's dive in. Dow drops 400 points. That's not good, guys. That is not good. S&P 500 falls for a 4th day as tech slumps. That's not good. That's not good. Bitcoin, for all you Bitcoin guys out there and gals, for all you Bitcoin guys and gals, Bitcoin is indestructible. It's going to blah, 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 blah. Okay, let's check that out. Briefly dips below $90,000 a coin. Now, when was the last time you seen Bitcoin under $90,000 a coin? Whoo, yeah, See where I'm going with this, right? See where I'm going with this. Stocks fell again on Tuesday after tech shares continued to slide on concerns about valuations of artificial intelligence related stocks, and as Bitcoin dropped briefly below 90,000, a sign of reduced risk-taking by investors. Remember a few days ago, we talked about risk on and risk off. Risk on is when investors are willing to take on more risk. They're willing to buy Bitcoin at $100,000 a coin, $110,000 a coin. They're willing to buy it at that because they're willing to take more risk. Same thing with artificial intelligence companies. Investors are willing to buy NVIDIA at $200, $205 a share. They're willing to buy Palantir at $200 a share when they're willing to take on more risk. Right now, they're not willing to take on that risk. So therefore, what do? They risk off. What does that mean? They sell. That's what investors are doing. Now, I'm not talking about investors like you and me. I'm talking about the big boys. I'm talking about the billionaires, the hedge funds, the institutional investors, the heavyweights, not the little weights like us. These people are starting to sell off of Bitcoin and equities. But why are they doing that? That's the question. Why are they selling off? We'll talk about that in a second. The Dow Jones Industrial Average was down 470 points or 1%. The S&P shed 0.9%, putting it on pace for its fourth straight losing session, which would be its longest slide since August. The NASDAQ composite lost 1.4%. AI chip darling, NVIDIA fell 2%. Fellow Magnificent Seven members, Amazon, Microsoft, also came under pressure. You're talking about the world's most valuable companies by market cap came under pressure on this risk-off rotation out of equities, big boy equities, hyperscalers, mega caps. But is that an opportunity for somebody like you and me? That's the question. Is that an opportunity for somebody like you and me to snuggle in this time of risk off by the major players where everything is dipsy daisy? Is it an opportunity? That's what you got to ask yourself, guys. You got to ask yourself, what would a logical investor, a logical retail investor do right now if you see the big boys risking off, selling off, everything's dipping? Is that an opportunity for somebody? That's the question. Is it an opportunity? NVIDIA has fallen 10% this month, leading up to the chip maker's third quarter results due after Wednesday's close. Now let's think about this for a second. NVIDIA Q3 earnings report is coming out on Wednesday. That's tomorrow, guys, November 19th, after the market closes. I believe it's going to be at 5 p.m. Eastern time. Now, again, I'm not an expert here. I'm just a regular guy on YouTube giving you his personal opinion. You go out and do your homework. But based on my homework, I believe they kill it. I believe when NVIDIA comes out with those Q3s, and if they win on top line, they win on bottom line, and they give really good guidance for Q4 and a forecast for 2026, and it's all good, I believe that will solidify and convince big boy investors that artificial intelligence is here to stay. Now, that's my opinion. That doesn't mean that's going to come true. It's just my opinion. Because I've seen NVIDIA kill it before and the stock price sell off. So it may not be enough to change the minds of some of these big boy investors. But keep your eyeballs on social media. Keep your eyeballs on your local or your national, financial news networks for these numbers that coming out tomorrow for NVIDIA. Big deal numbers. Because wherever NVIDIA goes, artificial intelligence goes. So if NVIDIA comes out and kills it, I think that reassures investors that AI is here to stay, but we'll have to see. We'll wait on that for tomorrow. The company, which is reporting toward the end of a strong earnings season, has been at the center of a debate about the strength of the AI-powered market rally this year. See where I'm going with this? They at the epicenter of it. Everything in artificial intelligence starts and ends with NVIDIA. Just saying, guys, I'm telling you, I'm reading an article, guys, and I agree with it. You go out and do your own homework now. You ain't got to take my word. Go do your own homework. But my homework is pretty clear, crystal clear, magnifying glass clear. NVIDIA is the 900-pound silverback gorilla in the artificial intelligence ecosystem. Wherever it goes, artificial intelligence goes. So tomorrow's a big day, guys. It's a big day. So you probably want to get you a good night's sleep tonight. Get up early. Do you some push-ups, get you some sit-ups in, get out there and get on a walk, get some fresh air in the lungs, get you a good breakfast, and sit back and wait on these Q3 results from NVIDIA, man. I think they're going to be powerful. I think they're going to be powerful, right? But it also goes on to say there is growing concern about the pricey tech valuations and the soundness of the AI fundamentals due to a boom in big tech debt offerings. Here's what they're saying. You guys are spending billions and billions and billions and hundreds of billions of dollars a year on artificial intelligence infrastructure. But yet and still, this is what investors are saying now, but yet and still, we haven't seen any meaningful profit yet from all these billions and billions and billions invested into what? Basically R&D or basically infrastructure. Investors are saying, when do we see some profit? When do we see the hundreds of billions of dollars that hyperscalers, mega caps, semiconductors, data centers, when are we going to see the profit? When are we going to see the profit? A big AI partnership announced Tuesday failed to lift related stocks like such deals have in the past. AI startup Anthropic said it will spend $30 billion with Microsoft, and in turn, Microsoft and NVIDIA will invest billions in Anthropic. NVIDIA and Microsoft remain deep in the red following the deal. You know why that's happening, guys? Again, my opinion now. I'm just a regular schmegler here. I don't know, I'm just giving you my opinion. Big time investors are starting to get tired of these artificial intelligence companies investing in each other. You feel me? They're starting to kind of catch on and say, well, every month, every 60 days, we get one of these gigantic NVIDIA types or Microsoft types or Google types or Meta types that invest in some other company, and then vice versa. We want to see some organic profits. We want to see organic profits. We're tired of all this y'all investing in each other. We want to see some profits from these billions and hundreds of billions of dollars that y'all are taking from shareholders and putting back into the company in this artificial intelligence thing. We want to see some profits. We don't want to see y'all investing in each other no more. That's basically what the market is saying, guys. Alphabet CEO told the BBC that part of today's AI boom did have some irrationality, and that no company is going to be immune if the bubble bursts. A lot of people think there's an AI bubble. I don't really believe that. I believe artificial intelligence is the future, guys. Listen, guys, y'all know I went to Phoenix, Arizona. I want to say it was back in, was it September? Might have been September or August. I can't remember. I'm getting old. I'm 57, so I'm sharp now. Don't get me wrong. Sharp like a freaking steel trap, but sometimes I do forget little things. Nevertheless, I went to Phoenix. Downtown Phoenix. I'm staying at a really nice hotel, big old convention center, beautiful. So I go outside, try to get me an Uber and get around a little bit. I see these cars driving around with nobody driving them. I mean, they were everywhere in Phoenix, especially downtown Phoenix. I can't say everywhere Phoenix, but downtown Phoenix where I was, there were cars driving around with no driver. It was doing it by computer. Artificial intelligence was driving around. I saw at least 30 of these cars with no people. There were people in them in the back seat, but there was no driver. It was self-driven by a computer, by artificial intelligence. So my point here is, listen, the CEO of who it is, Alphabet, Google, smart guy, accomplished guy, and of course he's smarter than me. But this bubble burst stuff, I don't know what he's talking about. Artificial intelligence is the future. That's the future. They just got to start making some money from it, which I think they will eventually, right? I think they will. Bitcoin dropped below 90,000 on Tuesday, continuing its slide from a record 126,000. Hold up. For all you guys out there that have, not really argued with me, but been on my case for years. Oh, Bitcoin ain't tied to the stock market. It's its own entity. It's deregulated. It's going to replace the dollar. It's going to replace gold. All y'all that argue with me in the little comments and in the live chat, just Bitcoin this, Bitcoin that. Stock market slide. Guess what Bitcoin doing? Slide too. Why? Because it's tied to the stock market. Same investors. You think these billionaires and these hedge funds and these institutional investors, that's who buy Bitcoin, guys. They're the whales. These billionaires are the whales. You and me are just an insignificant small part of this. We don't even matter to these guys. The people who move the price of Bitcoin are billionaires, hedge funds, institutional investors. And when they risk off, they don't just risk off out of equities, they risk off out of Bitcoin and crypto as well. Yeah, they tied at the hip. Sorry, I know some of y'all are heartbroken by that. And my apologies, but I gotta tell you the truth. I gotta give you the truth, people. I gotta give you the truth. Bitcoin is tied to the stock market. Sorry, I hate to break the bad news to you. It's not something that's gonna take over the dollar. It's not something that's gonna take over gold. It's not something where I'm gonna be able to go to the grocery store and pay with Bitcoin. What is wrong with you people? The only thing Bitcoin is a store of value. That's it. It's nothing else. It's poof. It's like smoke that just disappears. It's like a magic trick. It's like David Copperfield. You ever seen David Copperfield? Pull a rabbit out of a hat. That's what Bitcoin is. There is no underlying company. There is no underlying product. It's worth whatever the next person will pay for it. And guess who that next person is? Billionaires. They ain't willing to pay $126,000 a coin right now. They're willing to pay 90. So that's what it's worth. Sorry, but I had to tell you the truth. Gotta tell you the truth. Many tech investors have large cryptocurrency holdings. So the decline raised worries that a bigger stock market drop may follow. Bitcoin was last trading just below $91,000 a coin. You heard what they just said, right? Many tech investors also have large cryptocurrency holdings. Sorry, guys. Sorry. But when the markets back up at some point, hopefully, Bitcoin will come back up because it's tied to the stock market. Sorry. Had to break that bad news to some of y'all. Outside of tech, Home Depot shares declined after the home improvement reported an earnings miss and cutting its full year outlook. Can somebody say tariffs? Can somebody say tariff? The tariff dog? The tariff dog got him. The tariff dog took the profits. Yeah. See, when you're a company like Home Depot, yeah, a lot of your retailers that are in there, a lot of your products ain't made in the United States. Y'all do understand that, right? A lot of those products are made outside of the United States, and this little tariff war we got going on with the world, of course, they're going to tell you we're in the golden age. They're going to tell you inflation is basically doesn't exist. They're going to tell you they brought in $23 trillion in investment. They're going to tell you that. But not one of them can name one manufacturing plant that's going up right now outside of the automobile industry. Name one. Name one where somebody is bringing back their production to the United States and building a gigantic factory outside of the automobile industry. Name one. Drop it down in the comments, please. Somebody tell me. Pin it. Pin the location where this $23 trillion of investment is coming from. Where's that coming from? I don't know where it's coming from. I think it's hocus pocus. I think it's hocus pocus. I think it's a 3-card Monte deal going on here, guys. Very complicated 5D chess, 3-card Monte. Well, I'm going to call it 5D 3-card Monte. It's a very, very, very sophisticated 5D 3-card Monte. These folks are playing on us in the current administration. Boy, you know good and doggone well we ain't got no $23 trillion worth of investment in this country. Come on, man. See, here's the problem I have. A lot of us just only have on that emotional side of our brain. So when somebody tell y'all something like that, y'all actually believe that. Don't give you no proof, though. There has never been any proof that we got $23 trillion in investment in this country. But for some reason, y'all folks just believe it. Y'all, oh my God, we're rich. But yet and still, you can't go to the grocery store and buy Thanksgiving dinner. Many Americans ain't gonna be able to do that, guys. But we got $23 trillion in investment coming in. It's the golden age. Yeah. Sure it is. Sure it is. Sure it is. But back to Home Depot. Home Depot's suffering right now because of tariffs. Home Depot, in my opinion now, this is just my opinion, is suffering because of tariffs. It's a retailer. It's a giant retailer. Home improvement retailer. Where do you think this home improvement stuff come from? Pretty much all the companies that products are in Home Depot, them products are made outside of the United States, guys. I keep telling y'all, the importer pays the tax, the tariff tax, the importer. So if Home Depot is buying something from China, if they're buying something from India, if they're buying something from Australia, if they're buying something from Canada, those 4 countries don't pay the tariff. Home Depot pays it. Home Depot pays it. And guess what Home Depot has to do then? Pass it on to you and me. So guess what? Here's the catch-22 in this whole thing. We keep talking about this tariff revenue. That's just a tax on the American people. So I'm going to give you a $2,000 tariff dividend check. You just giving me my money back. I'm the one paying for the tariffs. So you just going to give me my money back, a little bit of my money back. Okay, let me get this straight. I pay for the tariffs. Then you come out and say, I'm going to give you 2,000 of it back. I mean, that's just like me starting a fire. I'm the arsonist now. I start the fire. And then I go put the fire out, and I want you to congratulate me. Y'all know that. Come on, man. Listen, I start the fire, right? I'm the one that started the fire. But then I go put the fire out. And then I come back to you and say, guess what? I put the fire out. And you say, oh, Richard, you're the greatest. You're a great guy. Let's give you a medal. Oh, this guy here put the fire out. But I started the fire. So Home Depot is in trouble when it comes to their guidance. They had the guidance. The market was looking for better guidance. Home Depot didn't give it to them. They can't give it to them. The tariffs. Let's move on. Let's move on. The market narrative has certainly shifted dramatically over the past few weeks as the market's reaction function with respect to AI has taken a sharp left turn from rewarding ever-growing CapEx spend to rapidly growing skepticism of further investment and future returns. Basically, the market is starting to say, you're taking all of this money and telling us what growth you're going to see, so we invested on that potential. We took your advice and tried to get ahead of this thing so we could catch the potential wave. Problem is, there ain't no profit yet. We haven't seen a return on our investment yet, other than hyperbole and hype and all this other stuff. So the market is saying, nah, we ain't interested in that no more. We're going to turn around and go a different direction. This is according to portfolio strategists at Nexius Investment Managers Solutions. Quote, pair that with crowded positioning across real money and systematic accounts, and you've got all the ingredients for a sharp de-risking and an accompanying narrative reset. So basically, I'm not that smart, but let me try to break this down for you, what the guy is saying. He's saying investors right now are starting to get smart to this AI thing. And they're starting to de-risk. And all that means is they're starting to take their investment and move it to different industries. One of those industries is the healthcare industry. A little bit of an uptick in the healthcare industry because of that de-risking from artificial intelligence. Now, again, I still believe that's short-sighted. But again, most billionaires and hedge funds and institutional investors can be somewhat short-sighted at times because they can afford to. You and me, on the other hand, I guess we could if we want to, but I'm going to stick with the AI industry for now. I'm not going to de-risk out of anything. That's just me now. You go out and look at it and figure your thing out for yourself. But that's what this expert is saying, is that these people, these big boys, are getting tired of it. They're getting tired of it. Adding to the angst this month is growing concern that the Federal Reserve won't cut rates for a third time in December. See, Fed gonna be meeting on December 9th and 10th. And on December 10th, they make the rate decision. The rate cut, leave it the same, whatever they're gonna do, they're gonna make that decision on December 10th at 2 p.m. Eastern time. Then the Federal Reserve Chairman gonna come out at 2:30 p.m. Eastern time and have a press conference and take on questions. Here are the odds if we're gonna get a third rate cut in December. Here are the odds. Here we go. Fed funds futures traders are pricing in roughly a 50% chance of a cut, significantly lower than their 90% chance priced in a month ago. So basically in October, investors felt like 90% chance that the Fed would cut rates for a third time in December. That has fallen all the way to 50% now, guys. So basically the market don't believe there will be a cut. And if you hear some of these Fed people talking, like these people on the FOMC who get a vote, you can already tell they're trying to backpedal and, oh my God, we should pause right now. I mean, why would you pause? Why wouldn't you keep cutting? The labor market is I mean, we ain't even getting any data for the labor market. I have no idea what the labor market is doing. We don't get no data. I don't know what the unemployment rate is. We don't get any data anymore from this current administration. They done stopped all the data. CPI inflation report, don't know. Don't know. Last one I think we got was for September. Don't know. All we know is what they tell us. And that's the way they want it. The current administration don't want you to get no hard data. They just want to go on social media and get up there at the White House press conference and just tell you people whatever they want to tell y'all because they know y'all will believe it. Because they know you're not going to go out and do any critical thinking. They know you're not going to go out and do any research. Not all of y'all, but a good portion of y'all not. Y'all know I'm telling the truth. I know it's hard to hear. I know the truth hurts. It hurts me. When somebody tell me the truth about something I done did, it hurt. It hurt. But the truth is, these people just tell y'all anything they want to tell y'all. And y'all don't even go, just like the $23 trillion that our president keeps telling people every single day. Oh, yeah, I brought in $23 trillion. Where is it at? Last time I checked, we still got $38 trillion in national debt. I ain't very good at math, but 23 trillion, 38 trillion minus even 20 trillion, I believe is 18 trillion. That probably should be the national debt right now, but it's not. It keeps going up. So how in the world are we bringing in 23 trillion? But yet and still, people will get online and fight tooth and nail that we got the 23 trillion. But yet and still, they can't even buy Thanksgiving festivities. We got people wrapped around the corner at food banks. The food bank is running out of food. But yet and still, we got 23 trillion, golden age economy. Come on, guys, it's propaganda. Please listen to this. Please listen. The Fed. Investors are counting on the Fed to revive the economy and keep rates low to justify higher equity valuations. The Fed's October meeting minutes and September non-farm payroll release are on deck Wednesday and Thursday releases, respectively. Will the Fed cut rates? I don't know, guys. I have no idea, to be honest with you. What I do know for me personally, I can't speak for you and your family, but for me, I look at the last 100 years of the stock market. And over my research, and again, this is just my personal research and my personal opinion, over the last 100 years, the S&P 500 index has delivered 7 to 10% rate of return. That's a fact, Jack. Go look at the statistic. This is not Richard Fain making up something. Go do your own research, and you'll come up with that conclusion, 7 to 10% rate of return over the last 100 years. This year, year to date, S&P 500, let's see what it is today. I want to give it to you right up to the date, to the second. I'm going to give it to you to the second. Here we go. Where we at year to date? 12.44%. With all the shenanigans we got going on right now, you still got year to date an S&P 500 that's delivered a rate of return of 12.47%. Now, will that last? I don't know. Might keep coming down. Who knows? But for right now, that's where it's at. So for a guy like me that says, hey man, should I turn into a panicking and sell when really I should be buying? Because see, that's the game plan of the 1%, right? The game plan of the 1% is to propagandize you so much that you sell when you really should be buying and you buy when you really should be selling. That's the whole point of the 1%, their manipulation tactics. Hopefully you guys got the logical thinking cap on and you go do your history, research on this thing they call the stock market and dive into it and do you some critical thinking. Because Warren Buffett, I know some of y'all know Warren Buffett and respect him. He says, be fearful when others are greedy. He says, be greedy when others are fearful. He's a billionaire. He has a company called Berkshire Hathaway that has, I don't know, hundreds and hundreds of $billions in the fund. He'd done okay. He say when people are fearful, that's when you should be greedy. He says when they are greedy, that's when you should be fearful, which is opposite of what the 1% want you to do, right? See, the 1% want you to be greedy when others are greedy, right? They want you to just, right now, they want you to be fearful. See, right now, they want you to be fearful when really you should be greedy, in my opinion. Now, I'm not telling y'all what to do. This is not financial advice. This is just me giving you a little bit of psychology into the financial thing that I've been involved in for over 30 years. Not an expert, but just a guy that's out here every day, retail investor, doing the homework, making the decisions, and I do pretty well. I'm not saying that my portfolio ain't down. It is down. Big time. Huge down. But I know that's temporary, though. Because I know the only purpose of the stock market is to go up at some point. That's the whole point of it. That's why it started at zero one time, and it ain't been back to zero since. See, it started at S&P 500 started at zero, and now it's 6,600 points. See where I'm going with that? It started at 5,800 points on January 2nd, 2025. 5,800 points. Today, on what? November 18, 2025, is at 6,600 points. That's over 800-point gain, even with Liberation Day 1 and this little baby Liberation Day we got going on right now. Will it last? No. That's my personal opinion. It won't last. Because if it does last, what's the purpose of the stock market? There is no purpose for it. There's no purpose for it. If companies are not going to go up in value and be more profitable tomorrow than they are today, what's the whole point of the stock market? There is no point. Just shut the whole thing down. The purpose of it is to go up. Now, that doesn't mean it doesn't have periods of consolidation and pullback. It does. That's healthy for the market. It's healthy. But don't get it twisted. Don't get it twisted. In my opinion, don't get it twisted. The whole point of this thing is to go up. That's why it's never went back to zero. Whole point of cryptocurrency, aka Bitcoin, in my opinion, the whole point of it is to go up. And at some point, I think it will, just like with equities. At some point, rotation back in, more risk tolerance. Boop. And who knows? May start tomorrow with NVIDIA. Don't know. Don't know. But here's something that you may want to consider. If you allow your emotional side of your brain to continue beating on you, you may turn into a panicking. You may sell it all. And then in 6 months, 5 months, 4 months, 3 months, 2 months, 1 month, when this thing go to the moon again, you're going to be looking at yourself in that mirror saying, why did I do that? How do I know? Because I've been there. I've done that before. I've cut bait on a position this year several times. I cut bait on them because I thought, it's going to take too long to come back. I can make it up somewhere else. And guess what? One of them was Rocket Lab. Cut bait on Rocket Lab after Liberation Day. Remember, Rocket Lab got down to like $14, $16 a share after Liberation Day. I was in it at $26 a share. I was in Rocket Lab at 26 a share. It dropped to 16. And guess what I said to myself? I made a calculated decision. I said, you know something? If this thing get to $20, $21 a share, I'm cutting bait. So that's what I did. I cut bait at $21 a share. Within a month, it was $40 a share. Only reason I tell y'all that, guys, is because I'm subject to it too. All I'm telling you guys is if you got conviction and you believe in what you believe in, hang in there. Hang in there. If you don't have conviction, do what you got to do. I'm just telling you, the whole point of this thing is to go back up, and in a big way. You see what happened Liberation Day, right? And within 2 months, guys, within 2 months of Liberation Day, I'm talking about June, you started seeing this thing take flight. By July, it was well into full recovery by July. Liberation Day, April. May was bumpy. June, we started seeing this thing take flight. By July, everything had done pretty much recovered. And then obviously, you know, by August and September, to the moon. All I'm saying is, guys, that I'm not saying that it'll happen this time. I'm just telling you, don't be a panicking. Go take a look at what you got going on. And if you got conviction and it has a good historical indicator on it of performance, you might not want to be a panicking. You might want to turn the logical side of your brain on and say, what's the whole purpose of the stock market over the last 100 years? Oh, that's the purpose of it, to go up. All I got to do is be patient, consistent, disciplined, and don't turn into a panicking. But if you do turn into a panicking, that's your business. I can't tell you what to do. Appreciate y'all, man, for rocking with me. I'm going to get on out of here. Like I said, if you don't mind, don't cheat yourself. Treat yourself. Get yourself down in that description box and check out them links I got. I got a Moo link down there. It's a monster. Check out that first link, which is that Moo link, up to potentially $1,000 in NVIDIA stock. But that's based on you opening up a Moo account and making a certain deposit. So go check out all the details in the link. Second one is the Wealth Builders Financial Community on Patreon. That's where I'm giving out the real game. Couple thousand members in there. And all we do in there is just help each other try to navigate these infested, shark-infested financial waters. We try to navigate these shark-infested, these alligator, crocodile, big snapping turtle, infested waters, financial waters. That's what we try and do. So if you want to be a part of that, man, where we can, talk about what's going on and you be in a community that's like-minded, going in the same direction, financial freedom, passive income, click on that Patreon button, Patreon link, and join the Wealth Builders, man. We'd love to have you. And then check out the website, Richard Fame Millionaire Mentor website, 10 big boy blue chip digital products that I think are pretty good products. So if you want a little help with credit repair, you want a little information on how to get into real estate with little to no money down, everything in between, check that out too, man. Appreciate y'all for rocking with me. Again, man, not here to be gloom and doom, just trying to give y'all my opinion on what's happening right now. Personally, nice little opportunity for me. I mean, I believe you build your wealth in the red and you collect your wealth in the green. So right now, since we're in the red, I might as well go ahead and build a little wealth. That's what I'm thinking, right? So y'all drop it down in the comments and let me know what you're thinking. Again, guys, go out and get your own financial advice. Go do your own research. I'm not here to tell you what to do. I'm just giving you my opinion on my YouTube channel. That's all I do. I'm no expert. I'm no financial advisor. This is not financial advice. This is just simply me dropping a few nuggets on you based on my personal opinion. All right? Appreciate y'all. Stopping by the channel for the first time, please consider subscribing, share the video. Y'all know what to do, baby. Smash that like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness, man, and never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you on the next video.